If you're self-employed and trying to buy a home, you've probably already heard it. It's harder for freelancers, business owners, or gig workers to get approved for a mortgage. And it's true. Traditional lenders often see self-employed buyers as risky. But here's the reality. Being your own boss doesn't mean you can't own a home. You just need to know how the system works and how to present your finances in the best way possible. In this video, I'll share the top mortgage tips for self-employed buyers, how to qualify, what documents you'll need, and how free mortgage search can make the process simpler and less stressful. When you work a traditional 9-to-5 job, your lender only has to verify your W-2s and pay stubs. Simple. But when you're self-employed, your income can fluctuate, and your tax returns often show less income than you actually make because of deductions. From a lender's perspective, that looks risky. They want consistent proof that you can make your payments, not just some months, but every month for decades. That's why self-employed buyers face more scrutiny. But once you understand the rules, you can prepare and increase your chances of approval. Tip number 1. Get your paperwork in order. The number 1 tip for self-employed buyers is to be prepared with documentation. Lenders will want to see at least 2 years of personal and business tax returns, profit and loss statements, bank statements, both business and personal, business licenses or incorporation documents, 1099s or invoices if you're a contractor. The goal is to prove that your income is stable, consistent, and likely to continue. The more organized your paperwork, the stronger your application looks. Tip number 2. Separate business and personal finances. If you're self-employed, it's critical to separate your personal and business finances. Mixing them makes it harder for lenders to see your true income and stability. Open a dedicated business account, keep clean records, and avoid running all personal expenses through your business. Not only does this make taxes easier, but it also makes lenders more confident in your financial profile. Tip number 3. Mind your tax deductions. Here's a tough truth. The same tax deductions that save you money every April can hurt you when applying for a mortgage. For example, let's say your business earns $120,000, but after deductions, your taxable income looks like $60,000. To the IRS, that's great. You owe less in taxes. But to a lender, it looks like you only make $60,000 a year. That's why, if you're planning to buy a home in the next year or two, it may make sense to reduce deductions temporarily so your income appears stronger on paper. It's all about balance. Tip number 4. Improve your credit score. For self-employed buyers, your credit score matters even more. Since lenders may view your income as less predictable, a strong credit score reassures them you're reliable. Aim for 700 or above if possible. Paying down debt, avoiding late payments, and correcting errors on your credit report can all give you a boost before you apply. At Free Mortgage Search, you can explore different loan options based on your credit score and see what programs you qualify for. Tip number 5. Save for a bigger down payment. Another way to strengthen your application is to put more money down. A larger down payment lowers your loan-to-value ratio, which reduces the lender's risk. If you can put 20% or more down, you'll not only avoid private mortgage insurance, PMI, but you'll also show lenders you're serious and financially stable. Of course, not every self-employed buyer has that much cash ready. That's why exploring FHA loans or other programs with lower down payment options can be a smart move. Tip number 6. Consider non-traditional loan programs. Some lenders offer programs designed for self-employed buyers. These might include bank statement loans, where lenders review 12 to 24 months of bank deposits instead of tax returns. Asset depletion loans, where savings and investments count toward your qualifying income. Stated income loans, less common today, where income is declared rather than fully documented. These programs aren't always available everywhere, and they may come with higher rates, but they can be the key for buyers who don't fit into traditional boxes. With Free Mortgage Search, you can compare these types of options side by side to see what's available in your state. Tip number 7. Get pre-approved early. If you're self-employed, don't wait until you find your dream home to start the process. Get pre-approved early. This gives you time to work through any issues, strengthen your application, and know exactly how much home you can afford. It also gives you credibility with sellers. In a competitive market, having a pre-approval letter in hand can make the difference between getting your offer accepted or losing out. Take John, a freelance graphic designer. He earned good money, but his tax returns showed far less income because of deductions. When he first applied for a mortgage, he was denied. The next year, he worked with an advisor, reduced his deductions, and kept his business and personal finances separate. He also boosted his credit score from 670 to 710. With these changes, he reapplied through Free Mortgage Search and was approved for a conventional loan with a competitive rate. John's story shows that being self-employed doesn't mean you can't buy a home. It just means you need to plan ahead. Self-employed and looking for a mortgage? How do you know which lenders actually understand your income situation? Why take chances with one bank when Dwayne Buziak, Virginia's #1 mortgage broker, can compare dozens for you? With more than a decade of banking experience and proven results, he helps self-employed buyers find solutions that work. His platform, freemortgagesearch.com, makes it simple to explore your best options without impacting your credit. And the best way to start is with freemortgagesearch.com. In minutes, you can compare lenders, explore programs designed for self-employed buyers, and get pre-approved, all without confusion or hidden fees. Yes, the process may be a little tougher if you're self-employed, but it's absolutely possible. With the right preparation and the right tools, you can qualify, get approved, and move into your dream home. Don't settle. Don't overpay. Search smart. Search free. Subscribe for weekly videos on mortgages, real estate, and home buying tips.